Hey everyone, welcome back to Weekly Market Outlook. This is for the 2nd to the 6th of October 2023. Let's take a quick recap of what's going on last week. So we actually do have a lot of information last week, but I mean, in terms of a technical front, I think the market was moving along with the technical analysis rather than anything else. In terms of the central bank guidance, we already got that for last week. So everything was trading within the range and everything is all good at this point in time. Just taking a look at last week, we have the Australian CPI number. The inflation does picked up a little bit from 4.9% to 5.2%. This is as per expected. And then in terms of the German preliminary CPI numbers, it was flat in terms of monthly gain. It's at 0.3%. We've got the US final GDP numbers. This one here does picked up a little bit. It actually did pick up a little bit. It is actually flat at 2.1%. The expected forecast was 2.2%. We got 2.1%. The weekly unemployment claims, this was a little bit higher, but not as high as the consensus. We got 202,000 to 204,000. Consensus was 214,000. So this is a lot better than what the market is expecting. In terms of the Tokyo Core CPI, we do see the inflation for the Tokyo Core CPI to go back down a little bit from 2.8% to 2.5%. This is below the market consensus of 2.6%. We've got the core PCE number, the monthly numbers here. We've got a slight drop from 0.2% to 0.1%. And that's pretty much it from the economic data for last week. So it was a little bit more on the technical front rather than anything else. And also over the weekend, we have a little bit of an improvement on the Chinese manufacturing number. This is now back up about 49.7 to 50.2%. So this is a very good number from China. And that does give a little bit of a boost towards the riskier assets like Aussie USD. Now, looking at the numbers for this week, I think we need to talk about a few of the bank holidays that we have here. Australia, I believe it was Labor Day for Australia, and the Canadian market is also going to be closed on Monday. Chinese market will be closed for the whole week, so we are going to be looking at a lower liquidity and volume this week, considering that the Chinese market is actually going to be closed for the whole week. Tomorrow we have a German bank holiday as well, so I think in terms of liquidity, we are taking a look at a lower liquidity at least on Monday and Tuesday because of all these holidays. Now, data are going to come in hot this week, starting with the ISM manufacturing PMI, which is going to be released today on Monday. ISM manufacturing PMI, we expect a slight improvement from 47.6% to 47.6 to 47.8. We got comments from Chair Powell as well, and a lot of comments from the Fed governors. I think the focus this week would be from Fed Powell, Chairman Powell, and Fed Governor Williams as New York Governor Williams. Those two are going to be the main focus for a lot of Fed watchers here. Okay, and then we have the RBA interest rate decision tomorrow on Tuesday. RBA interest rate decision, we are looking at a non-event here. RBA is expected to continue holding interest rate at 4.1% at this point in time. We're not expecting a change. We might see a little bit of a tweak in terms of their rate statement that they will consider the recent pickup on the inflation, but they will not be doing any adjustments at this point in time, at least not for the RBA. Tomorrow, we're not expecting a change. RBNZ also not expecting a change. They're likely to remain on hold at 5.5%. Also, in terms of the statement, I think it's per usual at this point in time. It's likely going to be data dependent. On Tuesday as well, we've got the JOLTS Job Opening numbers. Now, this is going to be the moment the market is starting to be a little bit more volatile. So the pickup moment would be when on the release of the JOLTS Job Opening numbers from the US. Expecting a little bit of an improvement from 8.83 job openings to 8.85 million job openings for this week. We got the ISM Services and ADP NFP number on Wednesday from the US, and we have the weekly unemployment claims on Thursday. And as per usual, first week of every Friday, we are expecting the employment numbers from the US. The NFP numbers, we are expecting a little bit of a drop in terms of gains from 187 to 168,000. I believe the forecast range is actually 150 to 168,000 at this point in time for the NFP numbers. And in terms of the unemployment rate, we are expecting the opposite. We're expecting a drop from 3.8 to 3.7%. So the expected data is likely going to be contradictory, where we have a little bit of a weaker gain in the NFP and an improvement in the unemployment rate. I think there would be a couple of scenarios that could play out. I think the best scenario for the US dollar is if the NFP is above market consensus and we see that drop in unemployment rate. That would definitely going to be boosting the US dollar significantly. Now, let's take a look at the technicals for this week. This is the dollar index. Last week we did an update on Wednesday and Friday, indicating that we might actually expect a little bit of a pullback to happen on the dollar index. We saw that pullback. On Friday, it actually dipped all the way down to 105.75 before closing the week back up above 106. Right now, we are above that 106 level. We anticipate an immediate resistance at 106.50 in terms of for the dollar index. And beyond that, we're still looking for a progression towards 107. That would still be a potential. However, if the market or the dollar index dropped down below 105.75, that would send a signal for a deeper correction on the dollar index. That's when we anticipate that drop towards 105 on the dollar index. Now, for the Aussie USD, again, this is flat, and we have been in the range-bound market condition since August. At this point in time, we're starting the week pretty much at about the same level again as last week. In terms of key resistance, it remains at 65 cents, key support at 63.50. Again, we are roughly midway on the range here, ranging from 64.25 where the weekly pivot is located. But if you take a look at the resistance one and the support one on the weekly pivot, we're looking at about the same range on the Aussie USD. And, to navigate this, since we don't have a breakout of the current range, we're still going to be trading this as a range-bound market condition and to trade within the range for the week. The Euro USD, we have a much stronger bounce from 1.05. At this one in time, if we take a look at that bounce off 1.05, we will consider this to be more of a piercing candle on the Euro USD. In terms of progression to the upside, it's still capped by 1.06 last week, but we do anticipate a potential push higher towards 1.0650 in terms of the correction for the Euro USD. Downward push on the Euro USD, we're probably not going to be seeing anything significant until we lost that support at 1.05. Now, obviously, 1.05 is a very important psychological price level on the Euro USD. So it's not going to be a level that's going to be easily broken for the Euro USD at this point in time. We anticipate price to be in the range of 1.06, 1.0650. I think in terms of the correction, this is not quite done yet for the Euro USD. Now, the pound USD, very similar situation here, but if we take a look at the rejection last Friday, it was very close to 1.23. So I don't know if we can actually count this as a rejection from 1.23. In terms of price movement, we are not quite yet at 1.21, so we could actually see price being pressured back towards that 1.21 level. So two things could happen here. Number one, if price is able to maintain a position above that 1.22 level, then we're likely going to be looking at that correction for another attempt to test 1.23. If it fails again at 1.23, I think that's where a lot more sellers are going to come in and attempt to short pound USD towards 1.21. Now 1.21 remains there, 127.2% on the daily time frame hasn't been reached yet. So I think a lot of traders are still projecting that move towards 1.21 on the pound USD. The dollar Japanese yen, this one here is a little bit intricate. We are very close to that 150 intervention level, right? So a couple of scenarios could play out, and I think there's one that could play out with a high probability, which is price touching 150, and we could see a little bit of a flurry in the Dow Jones, and we could see this one rally really quickly to two levels. One is 150.50 and the other one is 150.50. Now that is also where the resistance 2 and the resistance 3 on the weekly time frame weekly pivot is located, right? So we could actually see a little bit of a quick snap to the upside before it comes crashing down. Why? Because any projections above 150 at this point in time would cause a little bit of a panic to a lot of traders. A lot of traders are going to be wary that the Ministry of Finance could intervene if the dollar Japanese yen pushes beyond 150. And that concern means that any progression to the upside beyond 150 could be very short-lived. So we could actually see a quick snap for the dollar Japanese yen back below 150. Now, in terms of support, we actually do have a lot of support for the dollar Japanese yen. We've got 148.50, and below that we have 147.50. Now, obviously, 147.50 is going to be a significantly strong support on the dollar Japanese yen. That's where the previous resistance zone is located, and this is going to be our resistance zone going forward until we have a clear signal from the Ministry of Finance whether or not they're going to intervene, or are they just going to watch closely on the currency market. Now, moving on, we've got the dollar Canadian. Last week we mentioned the dollar Canadian is likely it's like in the face of correction. At that point in time, it was roughly around the 1.3450 at time of recording last week. Price has pushed higher from 38.2% Fibonacci retracement all the way up to 61.8% Fibonacci retracement. This is obviously the limit of a normal correction for the dollar Canadian. Looking at the momentum though, the dollar Canadian does seem to have enough momentum to continue grinding towards 1.36 and potentially 1.3625, where the 78.6% Fibonacci retracement is located. So we're not quite done yet with the correction. So I think the first half of the week we could see this grind happen, and whether or not it could break beyond 1.3625 really depends on the employment numbers from the US. If the NFP is a huge improvement above the consensus, or if we see a huge drop in the unemployment rate, those are going to be your two drivers for the US dollar this week. The dollar Swiss, we mentioned that it could continue to grind towards 91.50 and ultimately towards 92 cents. We got that last week, 92 cents. And last Thursday, we actually saw the first significantly bearish candle on the dollar Swiss for the past month, right? So we have that rejection pretty much at 92 cents, but this is still well supported at 91.50. So given the current scenario, if 91.50 holds for the dollar Swiss, we could actually see another attempt towards 92 cents and potentially even that push towards 93 cents. Again, is it going to be at the beginning of the week? I think this is all likely going to be at the end of the week. Now, support-wise, we've got 91.50. Below that, we have 90 cents on the dollar Swiss. Until we break below 90 cents, we are still maintaining a potential bullish uptrend on the dollar Swiss. So 90 cents would be the key critical limit. If we lose 90 cents, that's cue for a much deeper correction on the dollar Swiss. Okay, lastly, we've got gold, and with Fed comments for staying higher for longer, this one drives gold down from a fundamental perspective. Now, from a technical perspective, we do have a double top, a classic double top. We actually have the M pattern here. We got a double top pretty much at the August high and September high, which is at about 1940, 1950 resistance range that we highlight. And we saw that drop, and that drop took gold below 1900. It takes out 80.95, which is also the neckline for the double top, and price has continued to slide. From a technical perspective, it has completed that double top pattern, because from the neckline, the distance from the neckline and the double top, we have actually reached that in terms of how far it pushed out. it actually managed to close the week below 1850. So for now, projection wise for gold, I think we could actually see further projections towards 1820. There could be two scenarios here. We could see a continued push toward 1820, or we could actually see a little bit of a recovery towards 1875 before the NFP numbers. And if there's a rejection at 1875, then that's where we anticipate more sellers to come in to push price lower back below 1850 towards that 1820 level. All right, so that's pretty much it for this week. Obviously, this is a week that's going to start quiet, but again, as I said, it's likely going to snowball really quickly as the NFP gets released on Friday. So good luck with the trades, and I'll see you soon.